June 23rd, 2025, and it's 9 a.m. And this is a department overview. Basically, what we're doing is kind of a public education. So we've asked our assessor and our treasurer to kind of give a synopsis of what they do in their office, and also explain the taxes and explain to the public what taxes mean and who collects them and how to evaluate the homes and so forth. So, do you have anything further on that?
No, I appreciate you both.
We appreciate
and your busy schedules doing this for us.
Commissioner Dills?
No, not yet.
Okay.
I can't believe that if they can cover everything they do in the next hour and a half, that would be amazing.
Yeah. So I'll turn over. Which one do you want to go to first? That would be.
Do you want to go first because of values, or?
Yeah. So it's kind of a misconception that the assessor is your bad guy that takes all your tax money and everything. Basically, our job is to do the evaluation, to put a value on that property by appraisal as it's existed on January 1st. So the appraisers, they start their work basically today, and we have a 5-year plan that we submit to the state tax commission that says we have to do 20% of the county each year. And so we have areas. We usually have 3 to 4 appraisers. Currently we're down to 1. And so when we visit those properties once every 5 years, we look at several things. What's changed since last time you've been there? The grade, the condition. Have they added anything? Have they taken anything away? You look at roofs and stuff like that. It's rare anymore that we do an interior inspection, just for a couple of reasons. Safety is the main one. The next one is people don't want you in their home. I wouldn't want you in my home. That's my castle, and we appreciate that. But our job is to put a valuation on that. And remember, an appraisal is just an opinion of value. So it's that appraiser's opinion, and the more information you have, the better your opinion is going to be. There's 3 methods of valuing property. So we have cost, which we use occasionally. That's, you take everything but the land, value it new, and then put a depreciation on it. The argument usually comes up on the percentage of the depreciation. That's kind of where the argument lies there. And then you have cost, then you have an income approach. For instance, where we use this most often is a apartment. If you have that multi-unit apartment building, you take their income minus their expenses, and then you have your capitalization rate. We call it the rate, and you come up with the value that way. The bigger argument there is the cap rate. The higher the rate, the lower the value. Higher the rate means more of a risk. And on our Silver Mountain appeal, Trigg, the owner, that was the biggest argument, was that ski hills are risky, where you might have an 8% cap rate on a ski hill and a 3% cap rate on an apartment building that's 100% occupancy. And then the one we use most often is the sales comparison approach. That's where we collect sales. As you know, Idaho's a non-disclosure state, so they don't have to disclose to us what they paid for it. It's kind of like, you'll be at market value. So how do we find market? Well, go fish. And one of the reasons for that, and rightfully so, is your realtors always fight that. Because why would you hire a realtor if you can go up to the assessor's office and collect comparable sales and stuff like that? So Idaho's never ever been any type of disclosure. It would help us out tremendously if it would. When the market's hot and selling, we get lots of sales. I mean, enough to make a good determination. But in the downturn, they dry up and you don't get as many sales. So when values are escalating, like we just went through, we're pretty confident we need to be where we are. But now in the downturn, the more sales would be beneficial to us. So as appraisers do that, they come up with their opinion. And remember, we use this big tax commission program for both evaluation and sending notices and stuff. Always remember that county support saves us $250,000 a year. That the system we use, they're fantastic support. The system's old and it needs to be renewed, but the price is right for us because that's what we can afford. So we go up through all of that. And come the first Monday in June, we have to have our valuations in the mail. And that evaluation notice is our opinion of value. And do we make mistakes? Yes. But that's one of the reasons for the evaluation. And when you look at that notice, you want to make sure your homeowner's exemption's on that, if you're so inclined. You want to make sure if you have a timber exemption or an ag exemption, it's on there. You need to look at the legal description and the acreage, make sure that's right. The biggest one is the addresses. I mean, we probably get 7 or 8% of those back because people have moved, and you never think to notify your assessor or treasurer that there's an address change. So first Monday in June, those are sent out. People look at it, and you're going to do one of two things. You can say, "Yeah, that's probably right," or "No, I don't believe this is right." So then they call us, and we go out. We look at the property, or we talk to the people on the phone, and we explain to them that Idaho, we're supposed to be at market value, but the tax commission gives us leeway to be between 90 and 110%. We always try to strive to be in the 90s, or to 100%. So all those properties we looked at that year, that 20%, that's reflected on there. Now, the other 80% we're not at, Idaho law says we have to be at 100% market value every year. So we take the sales in those areas and look at them, try to get really good sales. And a good sale is between a willing buyer and a willing seller under no compulsion to sell. So unless it's a good portion of the sales, we don't look at repossessions. We don't look at sales between family members. We'll discredit the sale if it hasn't been advertised out on the market for sale. So those sales that are listed have been on the market. The person's under no compulsion to sell are good sales, and that's what we try to collect. And then we use that information to trend the areas we haven't been in. So if the market goes up, we trend accordingly. If it goes down, we trend accordingly. And I've seen both. I believe 1 year in Wallace, we increased everything 100% because it was selling for 100% more than what we had to assess for. The downturn isn't quite as dramatic, but we've seen some 20% decreases, 30% decreases. But it seems like during the pandemic, people were looking to work from home. They could work from home. And we thought sales would tank. But, with the use of the internet, working from home and stuff, people could work wherever they wanted to. And what more beautiful place could you ask for than here? So we've seen an influx. Most of our influx now is coming from Coeur d'Alene. I bet you in the last 2 weeks we've probably done 25 homeowners exemptions, and the majority of those people came from Coeur d'Alene, Cooley County, because two things have been priced out. Your average home sale in Coeur d'Alene is over $500,000 now, or they're tired of the congestion and stuff as it builds up. So we're seeing a good influx there. So when we send that out, they call us and they say, hey, I don't think this is right. And we'll look at it. We'll go do home interior inspections then and stuff. And we'll try to do much like a fee appraiser does. A fee appraiser looks at one property at a time, usually one a day, maybe two at the most. When we're appraising, we look at between 35 and 40. So that gives us a better chance to take a look at it. The property owner can say, hey, you know, this is what's wrong. You know, something you might not visually see when you're there. So we make those adjustments. And God bless Katie, because she was our appraiser this year. She went on a lot of calls. And each appraiser usually has their own area because they become familiar with it. She was visiting everywhere. And probably, I would say 60% of those would make an adjustment, you know, once we find out information and stuff. Now, if we make an adjustment or if we don't make an adjustment and they're not happy, then that person has a right to appeal that. And that's where you guys would sit as a board of equalization. So you hear those. And Sydney, how many do we have this year?
Maybe one.
Maybe one. So, you know, that goes to attest what a great job staff did. I mean, they really looked at it and stuff like that. We try to keep it non-confrontational. Katie's excellent, and so is Kelsey. Talk to people in a friendly manner, saying, this is why your value is where it is. Now, if you think that's in error, can we take a look? They did an excellent job this year. Also, we get a lot of calls on, you know, the assessment notice, as you might have noticed, has the last 2 years' values, the last 2 years' taxes on it. And it's really hard for especially older people to understand. I'm in favor of putting the values on there. I'm not in favor of putting taxes on there because I don't care what your taxes are. Our job is the evaluation. Personally, I do, like anyone else. But at that time, we want you to concentrate. Is that the value? I could have sold that home on January 1st. This year, it wasn't much difference. But in years past, January 1st till today was considerably different value. You know, some of them were looking at 2 or 3% increase per month and stuff. So evaluation was. So then, after we done with those, done with the appeals, then we give those values to the clerk. Then the clerk, after that, after yesterday, we can't make any changes. So if we did make an error and it didn't get caught, we can make a recommendation to you guys, and we do that sometimes and stuff. So it's not the end of the earth. So after you guys hear your appeal, they can take that on. They can either go to district court or to the state board of tax appeals. So that's not the end. I mean, so we always inform people that that's their right to appeal that value and stuff. So once we come up with those valuations, we give them to the clerk. Then the clerk computes the levies in that area. So your budget, for instance. Oh, and in that same time frame, the first part of June, we have to submit to you the new construction roll. That's anything, new additions, new houses, new shops, new garages. We have to submit that to the clerk also. So she takes that, and on your L2, you've got, you know, your valuation, you've got, so you can't go over 3% over your budget minus the new construction. So that new construction comes on, that pays for itself. I mean, on your service and stuff. So after she comes up with the values and the levies, then those are given to you. Well, she has to send them to Boise, and Boise has to make sure you did go over your 3% minus new construction. And there's another one in there too, annexation. A county's not going to annex property, but the city of Smeltville has been doing a lot of annexation with their new construction. They've been annexing that stuff into the city, so they get to go. Last year's budget 3%. Plus what they annexed in, plus their new construction. So you'll see that happen. Then once they came up with the levies, then it's handed to Carrie. So I'll let you take it from there, Carrie.
Okay.
There's just one more thing on that with the assessor's office is that the state mandates that your assessments are correct, or they can come back. So maybe you can explain that. The
Yeah,
state,
if it's undervalued.
Yeah.
So say if it was election year, and I'm going to put everyone at 70%, their value is going to go down because people think that the valuation, a 20% increase or a 27% decrease is a 20% increase or a 20% decrease in their taxes, and that's just not true. But I want people to think that, so I lower their values. I'm a nice guy and I'm running for re-election. Now the state comes in and they do their studies. And if you're not between that 90 and 110%, which they're going to do here in the next couple of weeks, they have the authority to come in. They would take my rules, my assessments, and they bring it right to 100%, mail out new statements, which the county pays for, and there is no appeal, period. I've only seen them do that twice in the 23 years I've been here, but they do have that authority. And one of the reasons they do that is that, as you know, Kellogg is a joint school district. So if I'm under-assessed, people in Kootenai County are paying more than their fair share into that school district. You know, and it could be a water district, it could be the fire district. You know, they go in, the fire district 2 goes into Kootenai County. So if I'm under-assessed, people in Kootenai County are paying more than their fair share. And it could be vice versa too. If Kootenai County is under-assessed, then our taxpayers are paying more than their share. So they have that ability. And they look at our sales too, the ones we discredit and the ones we use, to make sure they're arm's length sales between a willing buyer and a willing seller. Because if I wanted to, if I wanted to keep our values low, any of those that sold for over, I could move them off to the side and not use them. So they look at several things. One, they make sure you've done 20% of your county, or between 15 and 20%. They look at your sales, and then they look at your ratios and make sure you're in that frame. So I think if you were at 89 or 111, they would, But they also give you commissioners a chance to fix that. Say if they came in tomorrow and found out we were at 80%, they would give you guys the ability to bring it up between 90 and 110% before they sent out those assessment notices.
So they kind of watch over the process.
Yeah.
Okay.
Yeah. And that's one thing that consulting appraisers do, is each consultant appraiser has 4, 5, 6 counties that he collects that information, and then Alan Dornfest really computes that and makes sure everybody's within their 90 to 100% ratio. And we've never been out yet. And they look at 5 categories. They'll look at residential, and then vacant residential, just land. They'll look at commercial and vacant commercial, and then manufactured homes. So, and manufactured home throughout the state's been problematic because their values keep rising because people are desperate for affordable housing and a place to live. So, a manufactured home 5 years ago that was 15, 20,000 now is up 120,000. These manufactured home parks, the rents 4 or 5 years ago used to be $150, $200, and they're $300 to $450 now. So, it's just not the housing and people looking for a place to live. It's where do you place those and how do you use them? So, and in that equation, remember also there's personal property that's reported to us. You very seldom hear that because that's self-reporting, whether it's Walmart or the mining company or grocery stores, they report their personal property. And so we figured out and sent out assessment notices on that too. The personal property, there's a $250,000 exemption of the first $250,000 exempted. So that takes care of about 90% of them. So that just leaves us 10%. So you don't hear much on those. So, nice.
Thank you, Jerry.
Yeah, thank you very much.
Appreciate it.
Okay. All right. First, thanks for giving me the opportunity to go through the tax process. I'm going to give a short explanation of kind of how it goes from beginning to end. In determining your annual property tax involves many people working together. Each year, the individual taxing districts, such as schools, cities, and county, decide how much money they will budget from property tax revenue. At the same time, the county assessor puts into place the total assessed value on all taxable property. The county auditor then calculates the tax rate by dividing the amount of tax to be raised for each district by the total taxable value of the district. Finally, the county treasurer applies the tax rate or levy rate to your taxable value to determine how much property taxes you will pay. So I brought some examples of what all goes on. So from where Jerry left off about in July is when I send notification to all the districts to ask them, anybody that has any delinquencies on their water, sewer, or transfer station, different things like that, they can certify it to the tax bill. So that's going on. They have until August to give me the preliminary and then September to give me the final. Then all the mortgage companies in the meantime are giving me all the bank codes to put on all the parcels that have mortgages. And then we start taking off any specials or certifications off of all the properties at that time, waiting for our levy rates to come in, which is the 4th Monday in October. Then we dive in quickly. So, I don't know how to do this in an order for you guys, but here's an example of a tax bill. Right here, I'm just going to go through to give you guys an explanation of how to read it. Up here gives you the name and address for the checks to be mailed to. This is your bill number. I've blocked out any personal information so we could use this as an example. Your bill number, your parcel number. I'm sorry, this can be hard for everybody to see.
You might hold it up. Yeah, there you go.
So, we have something to stand it on. Okay.
Yeah,
Stay there? Yeah. Okay. All right. So anyhow, here you have your name and address. If you want to make any address changes, that's through Jerry's office. This is your legal description. This will be your physical address. And then over here, if you had a bank code, that would be here. Then you have your code area. We have 293 code areas in our county. That is 293 combinations of districts. This will have your land and improvements. Improvements would be structures, houses, sheds, garages, something like that. And that's what Jerry is assessing.
Any improvement to the
Improvements, yep. And then you have land and improvements. If you have a homeowner's exemption, that will be right here. And there is a $125,000 cap. So anybody that has like a $500,000 value, they're only going to get $125,000 off for their homeowner's exemption. This will give you your 24s and your 23 taxes, your values, taxes, total acres is right here. And then we have, I'll go down to this side, all the taxing districts that's in this code area. There is also the homeowner's tax relief. That is paid by the state of Idaho. They actually send us that money. Solid waste fee, that is done through our county transfer station. $84 for any livable dwellings. And you can use our county transfer station if you pay $84 to us. You'll get a sticker and you can go in there. Any circuit breaker customers that qualify for circuit breaker have a reduced rate of $42. So we reduce that. And then all circuit breaker money comes from the state of Idaho. They pay us. Then we have the school facilities fund savings. This is paid by the state and it goes directly to the schools. Doesn't come here. Let's see. On this particular tax bill, they have delinquencies. Anytime you have a delinquency, it's going to be in this pink box. It's going to list out the years. This one is owed back to 21. This is solid waste appeals only. This is if there was a mistake on your solid waste or a livable dwelling that burned down and now it's just bare land. You can appeal that through the solid waste transfer station and their number's right there. Here tells you that you can go online and you can pay your property taxes. There is a fee. It's $3.95 for Visa debit, $2 for electronic check. It's 2.45% of the total sale for MasterCard debit and all credit cards. And that's a convenience fee. We don't have anything to do with that. Point and Pay is the company we go through and they charge the customer, not us. So we cannot use tax dollars for fees. And then down here is your 2 stubs. They are backwards of what you think they should be. December 20th is over here. You have the opportunity to pay just the first half or the full year, or you can pay the first half and then the second half. They are December 20th and June 20th. If you had a mortgage company, let me back up. If you have numbers in this pink box for delinquencies, you're going to get a pink notice in December. That tells you that you might want to look at that. You've got delinquencies.
Does that come in the same mailing?
Yes. Yep. In the same mailing is also important notice. This just has all the information that you might need, the days that were closed for holidays, what happens if you're past due, all of our districts, the phone numbers to contact them. It's good, useful information. If you have a mortgage company, it will be stamped here, copy only, original sent to lender. That means that the mortgage company sent me a code to put on your tax bill, and they will be paying it. And then you will not receive a reminder notice in April that looks like this, that everybody else would be getting, because the mortgage company is going to be paying it. If your mortgage company is paid off and they don't send notice that it has been paid off, I won't know that until they send me notification, so you might not get the reminder notice.
Do mortgage companies typically pay first and second half?
Mm-hmm.
I mean, do they split it into two
Yep.
payments?
And usually, well, sometimes it's early, but a lot of times it's on December 20th or postmarked for December 20th. Anytime the tax deadline is December 20th and June 20th, your postmark can be postmarked for that day and still be considered on time. So on this particular tax bill, the county is right at the very top, and the whole tax bill was $732.54 before the solid waste and before the homeowner's tax relief. Did I go over the homeowner's tax relief? If not, the homeowner's tax relief is paid by the state of Idaho, and that means that I own the property and I live in the home on the property. You have to have a homeowner's exemption to qualify for that. So on this one, the county gets $264.44. So I broke that out. The county levy is broken into many sections. It's the Justice Fund, which is the Sheriff's Office, jail, and building. Revaluation, which is appraisal pay, travel, supplies, etc. Current expense would be to run many offices and departments, including but not limited to the treasurer, assessor, commissioner, building, grounds. Tort, that would be like I-cramp liability insurance, petrol storage tanks, insurance, and deductibles. District court to run their department. Preventative health goes to Panhandle Health. Parks and Rec runs and maintains the parks of the county. Noxious Weeds runs their department. Airport runs their department. Solid Waste runs the department and pays a quarter of the first quarter preventative health bill. Fish Hatchery is the Mullen Fish Hatchery and Utilities, and then the Historical Society, which is the museums in the county and the Sunshine Memorial Light and the labor to change it. So out of that $264.42, it's now broke into that many more sections. So like if we took Justice Fund, they get $177.78 of that many, where the Historical Society might get 12 cents. Any questions on that? Okay, then on the tax bill, right here where it gives you the web address for the county, you can find the voter approved bond tracker. I published that on the treasurer page, and that shows all the bonds that are out for like the schools or fire districts, consolidated library, how much it was, how much the annual payment is, what the term is, what the date of the election is. That has to be published for the state of Idaho. Then we have the back of the tax bill. And that has a lot more information. I do have to have the tax bills in the mail no later than the fourth Monday in November. If you are late, a 2% late charge is charged on all late payments made between December 21st and December 31st. Beginning January 1, interest on the delinquent tax and late charges calculated at the rate of 1% per month on the delinquent tax and late charge. So 1% per month for the first year. The second year is 13 through 24% and on. So it starts getting a lot more interest the further back that you owe.
Is that set by the state?
Mm-hmm. So if you are late on your second half, you want to be late on your second half. If the second half is not paid on or before June 20th, the half becomes delinquent and 2% late charge must be added. Interest on the delinquent tax and late charge is calculated at a rate of 1% per month beginning January 1 of that year. So 1 day late, 6 months of interest is added. All mobile homes cannot go delinquent. As soon as the deadline comes and goes, I send a 10-day letter out for the request of payment. If no payment is made, then it has to be turned over to the sheriff for collection. So I add $25 fee to that and turn it over to the sheriff's office, which in turn adds their fees, and they have 90 days to have it returned back to me with payment or the mobile home sold at public auction. Those are personal property, and that's the reason behind that. We do accept monthly payments in any amount of money. If it is delinquent, a portion will go to the delinquent tax, late charge, and interest. If it's current, so if you wanted to start paying in January towards your June payment, you're more than welcome to. You just split it up or pay however you would like, how often you would like. As long as it's paid on or before June 20th, it's still considered on time. There won't be no penalties. If you are current, we do encourage prepayment if you like. If you want to start paying towards your December payment, you're completely current. You can divide it out and however you want, whatever you can afford to make it easier. So when Christmas time comes or whatever else comes in December for a household, that would make it easier. That's what I do. I start making my December payment in July. I just took my half, divided it by 6, and that's what I pay. And then in November, when I get the bill, I adjust the amount. Another thing that I did go through, I took the 2024 levy rates for county and all the cities times 100,000 value, just to give an example of what the county gets versus what some of the cities get. So the 2024 levy for county times the 100,000 value, we get $234.66 as the county. And that divides out what I was telling you about district court or the Historical Society, Justice Fund. Mullen, same scenario, 100,000 times their 24 value or levy rate is $310.07. Wallace is $368.25. Osborne is $278.19. Kellogg is $354.53. Wardner is $206.87. Smelterville is $164.93. And Pinehurst is $128.91. I also went back and checked what our levy rate as the county was in 2019 versus what it was in 2024. In 2019, it was 0.004132321. In 24, it had gone down to 0.002346551. So it's gone down quite a bit, but values have gone up. So if you do owe back to this year, it's 2021 that I was working on for the tax deed process. So March 1st, if anybody owes back to 2021, March 1st of this year, we started the tax deed process, which involves adding extra fees, sending out certified letters, publishing in the newspaper, doing a title search, and they have the opportunity to still pay with all the fees and the taxes for that 1 year, all the way up until the tax deed hearing, which this year it's July 23rd. If they do not pay before that year or before that date, then it will go into the county's name. And then at that time, they have the opportunity to pay all years owing plus the year that we are in, any districts that they owe with certified funds or cash to get it put back into their name. That can only happen all the way up to the moment of sale, which will be in September of next year. I think I've gone through pretty much everything that I can think of to educate how to read
So
the...
will you kind of explain, because sometimes I was even guilty of it myself in the past. People just look at the bottom line on their taxes and
Yeah.
immediately the county's blamed for it, you know,
Right.
because it's the county billing. So just kind of give a little, I mean, it's the you have those line items there.
Yes. So let me bring this tax bill out again. So the county does not get $732.54, which is the total of the tax bill before the solid waste and before what the state has sent in. We only get $264.44. So if you have a city in your code area, then they get that portion of the money. On here, School District 391, for their bond, they get $49.54. Fire District 2 gets $101.50. I missed the supplement for the school. $222.94. West Shoshone Hospital gets $57.40. The ambulance district gets $25.34. And that money to the ambulance district is what they use to conduct their business for the ambulance district. So we only get $264.44 divided by those 9 or 10 departments, and offices to conduct what we need to. So, like, say a pothole in a road in front of my house, I can't blame the county because I live in Osborne, and it would be up to Osborne to use their money that I'm paying, which would be a portion of my tax bill, for potholes or whatever else that they would use that money for. No different than the fire district or schools or on and on.
Yeah. Thank you for explaining that.
Yeah. Is there any other questions on the tax bill that I didn't cover that you guys?
I don't think so.
No, I think you did.
Also in there, Carrie, it's not so much now as it was a couple of years ago, the forced assessment fees.
Oh, yes.
So
So that particular one does not have forced assessment, but that is, it's a special assessment. So we add on to all the tax bills that have a certain amount of property with trees. So it doesn't cover structures, it just covers if there was a wildfire to the property, but not the structure. The structure's through the fire district itself. That is through the Idaho Department of Lands. They're the ones that gives us a list of the parcel numbers and the amounts to certify to the taxes. Is there
and
any more on that?
yeah, they in our area they used to not collect that, and then they had a different manager come into Cataldo, and the state said, "Hey, we need to start collecting these fees." And Idaho Department of Lands uses that for equipment, wages, and stuff like that. So basically, your fire department, if you're in a fire district, is responsible for the structure, and the Idaho Department of Lands is responsible for the forest or grasslands and stuff. So that gives them money to help defray their costs. That goes to the state, so.
And that question did come up just a couple weeks back, that they didn't have, I don't think they had the forest protection, but they were not in a fire district at all. So I was told by a fire district that they can actually pay them directly and still be covered. So if their house caught fire, they would still be covered.
Right.
But that doesn't fall on the property tax bill.
If you're outside a fire district, you can contract with one of the fire districts for coverage. The North Fork of the Coeur d'Alene is really popular on that for fire district too. So they charge them a separate fee, and that's paid right to the fire district then.
Right.
One thing I did touch on, and it's very important, is the circuit breaker program or property tax reduction. They're getting away from calling it the circuit breaker. They used to call it the circuit breaker because it stopped the circuit of high taxes for senior citizens, widowers, disabled. And so many of those people thought it was like energy assistance. And they didn't need energy assistance, or they were already on an energy assistance program. Well, it goes to pay their property tax. So you have to be 65 and older, disabled, widower, one of those three, any age for widower, and disabled. And there's an income limit. So your income cannot be, last year, after medical expenses, of $37,810. So medical expenses are supplement insurance, pharmacy, eyeglasses, hearing aids, mileage, anything out of pocket you would spend for the doctor. And it's on a sliding scale. So those people that had a household income of $37,000 would qualify for a $250 benefit. But on the other hand, if you had an income around $14,000, and believe me, there are people out there with an income of $14,000. How they do it, I don't know. They could qualify up to $1,500. Per capita, we're the highest in the state. I think last year we had 830 some people qualify for it. And that money is paid through the sales tax program. So two things. One, it makes the state of Idaho our largest taxpayer, returning those funds to Idaho. Two, it's our way to get some money back from Boise for the most needy. And I'm pretty comfortable saying that without that program, there would be 250, 300 of those individuals that would not be in their homes. They just could not afford to pay their property tax. It's a great program. You have to apply before April 15th, though. So if you know of anyone, and Carrie does an excellent job, and so do you guys, mentioning it to people. In the old days, we used to put on K-Wall and in the press, and you'd reach 90% of the people. But now it's hard getting that word out. So any new applicants, I tell them, ask your neighbors if they're on the program and stuff like that, because I know there's people out there that can qualify. I think AARP, when they do taxes, and a lot of your tax preparers, they're familiar with the program and will turn people our way to say, hey, I think you might qualify for this program. But it's a fantastic program. It's very, very time consuming, but it's well worth the benefit for those people. So,
and I have actually had customers say, well, you guys don't get the money, so why would I do that? So I explained it. Actually, the state of Idaho sends us the money. So, and some of them are just so proud that they don't want to utilize
they don't want
the
to take
program.
County dollars. And,
right.
And I tell them, I said, you pay sales tax, don't you? And they said, well, yeah. I said, you're funding the program yourself. So I've had several of them that will sign up after that. So, but it's, unfortunately, a couple of years ago, they put a cap on it of if your house was over the median income, you won't qualify. And since then they've raised it. It's pretty high. There's only a handful that don't qualify because their homes are worth too much. But they enacted that because people sell out in California for millions of dollars, come up here and buy a $400,000 home, $500,000 home, put the money in the bank. Those people can pay for their property tax, and yet they qualify for the program. But unfortunately, a lot of our widows, the miners made really good money, but they had crappy pensions. So when they passed, and a lot of our miners died young, they left these widows with these nice homes that would not qualify, but yet their income would qualify them, but their houses were too much. And unfortunately, those widows, most of them are widows, they don't care what their houses were. That's the place they want to stay in until they die. And us in the state should give them the means to do that. And so they've raised it considerably. So God bless them. I wish they'd just remove it totally. So if you ever talk to your legislature. And another thing that hurts our homeowners is the freezing of that homeowner's exemption. 10 years ago, $125,000 took care of most of the homes, half of it.
Yeah.
That's not so true anymore, and yet they haven't raised that. They used to index it, where if they were still indexing it, it would be up towards $275,000, the maximum limit, and that would take care of half. So it was half up to $125,000. But pretty much anymore, it's $125,000. You don't see really many homes under $250,000.
Right.
And that's, people think because their values are going up, their taxes are going up. Well, it does somewhat, but not in proportion. If that was true, you guys wouldn't have to worry about revenue. We'd all be sitting pretty doggone good. So it's just who pays it.
And another thing, homeowners exemptions are filled out in your office, and they can do that any time of the year.
Yes.
After the new change.
And where do they fill out circuit breakers?
Our office.
Yeah, that'd be good to mention.
Yeah. And they can request a brochure on it anytime. The limits haven't been set for 2026 yet, so some of that information might be a little old, but it's pretty relevant. It changes a little bit. So,
Another thing on the solid waste, if you're paying the county the $84 or the $42 if you're on a circuit breaker, they can actually get a sticker from the county dump, and they can physically go in there with, I think it's up to 2,000 pounds a month, and bring their own garbage in and not pay it for a garbage service. Or if they're cleaning out their garage or something, they can take their garbage in there.
Anything further?
Good information.
Yes.
I just wanted to add one thing that, we're here to educate people on how the taxes work, and we're not the only one that collect. We collect all the taxes.
Right.
The cities also have budgets like we do. They can only raise 3% of their budget. The taxing district, the schools, the fire department, and the other taxing districts, when they raise taxes, taxes are raised. I mean, even if the county doesn't raise taxes and they raise taxes, your taxes are still going to be raised. We just collect the money.
Yeah.
We have nothing to do on how much they can raise their taxes. They can only raise 3%, but we have, we don't have any control over that. We just have to accept collecting the taxes, and then we give it out to them.
Yes, so every month when I'm collecting the taxes, then at the end of the month when I balance, I turn everything over to the clerk's office. Then they send that portion out to each district that we've just collected for. So the tax bill that I showed you that had all the different districts, they're going to each get mailed that as long as the portion that they paid. So if they only paid half, then that half gets mailed to them. Or if they only make a payment of $20, it gets divvied up within all of the districts in that code area. And then it's mailed out to them once a month.
And also on that, remember, those entities can only raise theirs 3%, except the voters give them permission to override them. That's where you see your overrides, and most of the time it's the school districts that do that and have the override, so they can override that 3%.
Yep.
And if anybody ever has any questions on tax bills or concerns, they can always call my office or email me. Our address or our email addresses are on the county website. And there's lots of information out on our county website that customers can find.
Anything further?
No, I really appreciate it.
Yeah.
Thanks for taking the time to explain it. I get something every time I hear it. A little more.
Public question?
Comment? Yes, I agree with Jerry. Jerry probably takes more heat in this building than anybody else. But people need to understand, it's not him, it's all the budgets, it's the department heads, it's elected officials, it's taxing districts. They're the ones that are raising their budgets up, but he takes the heat for it. I don't know if you said it or not, Carrie, but I believe on your tax notice it says every public hearing for their budget's on there. When the date is, people need to go to those public hearings and either make your statement to them, because Jerry can't change what they're going to tax. Let them know. September is ours. And the most I've ever seen is maybe a dozen people at ours. So if you're going to complain, get involved, come to the public hearings, make your statement about what you don't like, not to Jerry, that can't change anything. And also, I'm glad he brought up the Smelterville, the Maverick property. As you know, we're starting the area of impact over again, and that was part of the area impact. We lost a lot of taxes to the city of Smelterville because that was in the area of impact. I'd like to see that narrowed down so the cities aren't benefiting when some business moves in, and we've been taking care of it all these years. Thank you.
Thanks, Matt. Those notices are on the assessment notice.
Yep.
The notice for the tax hearings are on
Yeah,
the
I couldn't
assessment
remember which one
notice,
it
so,
was.
yeah, with their phone numbers. So.
Any questions? No. Okay. If there's nothing further, meeting adjourned.